The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick and Arabile Ghamidi. These are your headlines today. Apple's new iPhone 16 fails to send the stock higher as investors and customers have to wait for full AI features, while rival Huawei clocks up more than 3 million pre-orders for its new trifold handset. Wall Street rebounds from its worst week of the year as soft landing optimism pushes the S&P 500 to see its biggest daily jump in 3 weeks.
Elsewhere, Chinese exports topping forecasts, rising at their fastest pace in almost 18 months. But imports languish near the flatline amid depressed domestic demand. Kamala Harris and Donald Trump preparing to face off for the first time in a crucial debate as polls show them neck and neck in the presidential race.
And global dividends hit a fresh record in the second quarter, topping $600 billion, with more than 90% of firms either raising payouts or maintaining them. That's according to Janus Henderson.
Classic bounce back on markets yesterday. I thought it was fascinating. We had a woeful start to September, markets selling off very aggressively. But what we saw on the back of that, another entry point for a lot of investors and traders who may have missed that August sell-off. And August, it came very quickly, but the rebound was also very swift. So if you sat idle, you missed out on that re-entry opportunity. So I think we saw a nibbling around the semiconductors yesterday in particular, around the ARC, some of the spicier momentum stocks out there. But I think there's still a lot to play for. We're talking about the debate coming out later today. Will the politics start to have an impact on the stock market from here? And of course, there's more data coming in the form of CPI.
Well, yeah, and I'm looking forward to CPI in the next 24 hours. But I'm also very interested in what we saw involving credit yesterday. And I think that is sweet music to the market's ears if they wanted to see a woeful figure on the consumer credit, on revolving credit, on delinquencies. And that is what the market, I guess, wants to see to a certain degree. They want to see, although they don't want to see a recession, they do want to see more impetus from the data for the Fed to cut.
Yeah, demand destruction and then impact on the credit side. But of course, another big event too, and that is around Apple. So we saw the company take the wraps off the iPhone. Let's just take a look at some of the specs here. Apple has unveiled its new iPhone lineup with a focus on upcoming AI integration rather than an immediate rollout of new features. The device will have a new action button, which allows users to access the camera more easily and control some apps. Shares closed flat on the announcement. The product event comes ahead of a European Commission ruling expected this morning on whether the firm will have to pay 14 billion euros in back taxes to Ireland, the latest development in a decade-long saga. Arjun joins us with more. Arjun, this is a typical announcement these days. We get a bit of tech news and get some regulation on the back of it as well. But when it comes to what Apple unveiled, it felt like it was a little bit underwhelming because this was meant to be the big moment for Siri, all about the AI features. The reality is you don't get them today. These features will run on the iPhone 15 already on the marketplace. And you got a camera button that you kind of felt they could have released at any point in the last 12 months.
Yeah, I think the event really highlighted that it's a lot harder to innovate, I think, on the surface in terms of hardware these days on the smartphone front, if you're not bringing out some sort of foldable phone as well. Where Apple, I think, does excel here really is the new under-the-hood chip, the A18, that is going to power a lot of these processes. But I think the event sort of brought together really Apple's prowess in the hardware, in the software, and that whole sort of ecosystem. So yes, I think on the sort of hardware front, the devices weren't, blowing it out the park. The software upgrades, they were staggered. So again, that might cap demand in the near term. People might not be rushing out to buy the latest iPhone 16, but I think it sets the stage, perhaps not for this year, but for the coming years for Apple to kind of more tightly keep their users locked in. And that's what the success story around this company has been.
All of the commentary beforehand, I mean, forget about the sleeker design of the watch or the AirPods 4 with the hearing aid, all that stuff. It's all peripheral. This is about AI. You guys have told me that, so I'm going with it as well. And so I'm sure will our next guest. And until people have had, as you quite rightly say, the full suite of using the AI as Apple envisages it towards the end of the year, what is the catalyst to spend? Where was the catalyst to move from an 11 to a 12, from a 12 to a 13, to a 13 to a 14, 14 to 15? The 16 is supposed to be always bang, better chips, better AI as well, but it's going to be proof in the pudding. So I don't think this is going to be everyone just rushing out to buy this. It's going to be a slow kind of metamorphosis of people thinking, okay, it's actually really, really good. So it's going to need the users to turn around to people and say, this is amazing, or actually, I can't really notice a difference.
Yeah, look, I've been using sort of AI features on mobile for the past few months, and they're very limited. They're very limited in terms of the new features, the generative AI features. They're still very limited in terms of what they bring to my day-to-day life, as it were. I'm not using those.
Sounds like 5G
AI.
all over again.
Exactly. Well, I'm not using those features every day, and I think that's going to be part of the story here for Apple. It's a slow rollout, it's staggered. US users will get it first. Yeah. They'll see a few features, then it will come to other users around the world. So it won't, I think, push people to rush out and buy it right now. It even might say to people, yes, these phones are sort of future-proof to some extent if Apple are going to continue to roll out these products, but maybe I might wait until iPhone 17.
And again, stunningly exciting for UK consumers that we get to spend, despite the fact that cable is now $130.74 and the Pro Max, the largest one, $1,199. How fantastic that we get to spend £1,199 on exactly the same phone. 30% price improvement.
Let's get to Janus Henderson, who is the CEO of Banrian Capital Management. Thank you very much for joining us today. Let's get into the AI stuff. I mean, it was really underwhelming. We saw what it looked like, but it's not on the device yet. So what do you do with that if you're a consumer? What do you do with it if you're an investor?
I love the little back and forth you guys had, because it was reflective of kind of how I felt when I saw the announcement, and it was very underwhelming. And to your point, you really need the 16 to get all the benefits. The only really cool feature I saw, which will only be available on the 16, is the visual intelligence part, where you can take a picture of something and then it will tell you like what it is. I don't know about you, but I always wish I had something like that if I find a random bug in my house or trying to figure out if it's a weed or a flower. So that is interesting to me, but it is only available on the 16, so you have to upgrade. I have a 15. I know some of the 15s will have AI incorporated into it, but you won't get the full features. So I think it does cause the people who are big Apple fans, the people who always upgrade with the cycle, will run out and do it. I think people who have much older phones may look to make that, finally make the upgrade. But yeah, to your point, I don't know if there's enough to really make people run out. I know every time I get a new iPhone, I never feel like it lived up to the hype.
What sort of pressure does this put on Apple to bring the AI very quickly to the device then?
Well, I think that there's a lot of pressure in that respect. They want to be able to stay competitive. But I think we all kind of miss Apple's key advantage here, which is that if you are in the Apple ecosystem, no matter how much I'm sitting here kind of nitpicking my feelings on my iPhone, I am never switching. And I think, I'm wearing an Apple Watch. I have an iPad. Like, I'm never leaving the ecosystem, even if I know that one of the competitors has a better product, because it's just too convenient. Ultimately, that's why Apple continues to win here. And while I do think it's imperative that they get these AI tools out because they don't want to fall behind, I don't think it is make or break if they're a little bit like a month or two behind the competition and they still put out a high quality product.
Shana, hang on a second. I'm just showing the audience. You might not be able to see this, but I'm showing the audience a picture of a phone with a plant on a phone. Right? And I looked up what the plant was the other day, and it told me it was a plane tree. I thought it was something else. The point is, my phone is an iPhone 11. We can already do a lot of the stuff that you were hoping for on the 16. So where's the whiz? But that's already a form of AI, and that's on an 11, let alone all the other devices.
Yeah, but as I said, they are rolling out some of it, but the part that I thought was cool, and I know there's apps that do this, but I like the idea of it just kind of being in my iPhone, is like, if I see somebody wearing a dress that I really like, take a picture, figure out where I can buy it, that kind of thing. And I don't think that there's an opportunity to do that with the current iPhone. Like I said, I have a 15. I know I can get the plant stuff. I don't think I can get the bug stuff. Having the ability to do it with anything is kind of the cool part. And that is kind of where we push it forward. But again, to your point, is it enough of an impetus for people to go out and run and get the latest and greatest? I don't know if it is.
Jana, a lot of the focus around Apple over the past few years has been around that sort of multi-billion-dollar services business and how well they've been able to monetize their software and services. What does Apple Intelligence do to that business? Does it move the needle? Is there a new leg of growth in terms of being able to monetize, charge subscriptions for some of these AI services? Perhaps not today, but in the future?
I'm sure there is, but at the end of the day, I don't know if this is a competitive advantage as much as a need to do to make sure that you aren't falling behind kind of move. Ultimately, AI is the future for pretty much everything. And Apple was slow to this party. And so for that reason, this is a very important development at Apple to be able to maintain market share, but I don't know if it's enough to take market share. But you never know what else Apple could be working on. Unfortunately, I haven't seen Apple be as innovative as it once was when Steve Jobs was the visionary. I feel like they play it safe. I haven't seen them do anything kind of out there. So I'm not overly enthusiastic. Now, the stock is a different story. You got to separate like the vision and how interesting it is, like in NVIDIA, where you kind of get caught up in the potential opportunity versus Apple, where obviously there's growth opportunity and things of that nature, but it really comes down to the valuation of the stock and whether or not it's attractive from that perspective. But overall, for the company, AI is more of a you have to do it than this is going to be a huge competitive advantage.
Every time we get a new iPhone, we see some of the big under-the-hood improvements, the new chips, advancements on the camera, etc. But does Apple need to innovate more on the hardware front? We've seen in China, Huawei release a tri-folding phone. Samsung's already in foldables, the Flip and the Book style. Does Apple need to jump into this space as well?
I do think they need to be innovative, but I regret to inform you that the flip phone is not a new thing. I had one myself like 20 years ago. It's just rebuilding something that was already there. But I digress. The point being is that, yes, I do think they need to be innovative. They need to come up with something flashy. Every time they get a new iPhone, I come out thinking I'm finally going to have a camera that blows me away. And I'm always disappointed. Maybe I just don't know how to use it correctly. But I feel like if they really, really want to make a splash, they have to do something like really different. And again, to your point, innovative in design, innovative and functionality. But, it's been more of the same for years now. And I think that if they really want to make a splash and really do something to, get people excited and drive the upgrade cycle, they really need to introduce something that nobody saw coming.
Yeah, look, Shana, Jim Kirk had a flip phone on the Starship Enterprise in 1968, so I'm with you all the way on this one as well. But I'm going to go back to your valuation because, look, you can barely find an analyst out there who doesn't like the stock. In fact, there's one seller in the entire universe. It is currently on this one. 11 holders, 24 buyers, 12 strong buyers as well. I know that you've owned this stock personally and your family owned it and your firm doesn't own this one, so I thought I'd get those disclosures out of the way. But what's the catalyst for you getting more excited about a stock that you already own? I mean, do we need to see a price demise or actually has it just got to grow into the current valuation?
It's got to grow into the current valuation. It is one of the cheaper of the Mag 7 and the S&P 500. And in terms of the other tech names that everybody is really excited about, it certainly hasn't kept up pace, which is kind of why it's attractive. But, as somebody who's been following this stock for a really long time, I distinctly remember pitching this stock to a portfolio manager at Fidelity and right before the iPhone launch and him telling me I was crazy thinking the stock would be worth $100 because I think it was worth like $8 at the time. I was totally right. I am not as excited about the stock and I don't see that kind of upside today that I did in 2006. But I do think that as a leader in the technology space and the way that they've built their ecosystem, they're not going away and they are a well-run company, but I would like to see them do something innovative like they used to get more excited about the stock. But I do think it's a good stock at its current valuation. There's upside potential. Do I think this is like a 300% increase or, NVIDIA 2.0. No. But I do think it is an attractive stock at this valuation and that there's opportunities for upside from here.
Yeah, it's fascinating, isn't it? The stock doing nothing in after hours, 0.01, I think. Flat as a pancake. Does suggest we all fell asleep on the back of the announcement. Janus Henderson, thank you so much for joining us, CEO of Banrian Capital Management. Well, let's get to Huawei, the opposition. They will unveil a three-way foldable phone today in its own launch event, just hours after Apple, as it says it has already received over 3 million pre-orders. Research from IDC suggests that's equivalent to more than 3/4 of the current foldable phone market globally. This as the firm seeks to widen its lead over the world's largest company in the Chinese smartphone market. Huawei's announcement is due at 8:30 CET.
Have you seen how it folds? Was it side to side, then what?
It's like a Z.
Like a Z? Oh,
yeah,
really?
You sort of, yeah.
Oh, okay.
Like
not
an
like
accordion.
It's more of a like
I
a
like
concertina.
the idea. I like the idea. If they can get it thin enough,
Yeah.
where you can put it in your pocket, all of a sudden you've got a massive tablet in your pocket.
Yeah, multi-use, right?
I thought someone was working on like kind of rolling up a newspaper type one
Yeah,
as well.
they've got,
we've
they've
seen
got these
those too.
concept rollable screens, one
We've
you wear
seen
on
them
your
all.
wrist.
So does this one have AI in the Huawei device?
Well, we'll see when they bring it out, but it's all going to depend on the chips they have access to and what processors they can bring onto the device. But I'm sure they're going to push that quite
You're coming
heavily.
back to talk to us again?
I will do.
I hope so. A couple of hours' time. China's exports grew 8 points. This is a good figure on the export front, but what does that mean for their international trade relations? There's the question. China's exports grew 8.7% year on year in US dollar terms in August. That beat expectations and is welcome news for an economy that's been struggling to boost domestic demand. We spent a lot of time talking about that with a guest yesterday. Exports to the EU grew the most, up 13%, but imports disappointed, growing just 0.5%. More importantly, what's coming up on the show, Arabile?
Well, Steve, global dividend payouts hit another record high in the second quarter. We'll break down the findings in the latest Janus Henderson's latest global dividend report that's happening this hour. Plus, the Trump and Harris campaigns, well, they're making their final preparations for tonight's big debate. We'll head out to Philadelphia for the latest. And remember 5G? Well, UK telco EE is rolling out its latest 5G tech in the UK. We'll be hearing from the CEO, that's Mark Alera. The first on CNBC interview is coming up at 9:15 CET.
A big day for markets stateside yesterday, and we saw a real bounce back taking place right across the boards. Wall Street performing well. And don't forget, as we kicked off the month of September, it's been sell, sell, sell. So a reversal of that trade coming into the mix, and the Dow up 1.2% as a result. Very similar ranges, in fact, across the board. So in lockstep, we saw a performance. More usual players as well to the upside. Goldman Sachs for the likes of the Dow, and of course for the rest of the other major boards, the S&P and the Nasdaq. You could see it was NVIDIA that were the outperformers in session. So rally is what we had. The question is whether it continues on. Don't forget, we've got the big debate stateside this tonight. So whether the market starts to impact more around some of the election promises. Also, of course, more data as we count down to the Fed, and the market was unconvinced on the back of the non-farm payrolls report Friday as to whether it was going to be a 25 or a 50 basis point move. So let's see whether the remaining data will seal that decision for the markets. To the Asian markets and what we're seeing across the boards, more weakness out of China. That's been the real takeaway message. We've seen, for instance, stocks out of China reverse. Tourism stocks have been hard hit at a record low on the CSI. So China very much again roiled by some of the data. And there is a view now, if we look at some of the export-import figures, that we are seeing a ramping up of some of the exports to avoid any trade tariffs potentially down the road. But the import side still weak because of the domestic position. You can see Japanese stocks are trying to recover with Wall Street. They've been hard hit, but it is a very modest range, isn't it? 0.33% there. The opening calls. This is how European markets are setting up for the session. We are looking a little bit firmer on the DAX. So the German stock market seeking a little bit of up big action. It did gain about 0.75% yesterday, breaking a 4-day losing streak. The other major boards also improving, so we did see the rally, but this morning looks a bit more tentative, doesn't it, than what we had a day earlier for most of these markets. The FTSE, for instance, was up more than 1% as it closed out the day, now looking to give back some of that territory. US futures, let's see what sort of bearing those US futures are having on sentiment. It is a little bit weak, isn't it? Soggy at this hour, called lower on the Nasdaq in particular, down by about 0.33%. So a slight softening up expected at the start of this session, Steve.
Yeah, some fascinating data around the moment. We've already alluded to that throughout the show. US consumers are still expecting inflation at 3% in a year's time, according to the latest survey of consumer expectations from the New York Fed. Respondents are also seeing price pressures at 2.8% in 5 years. So, yeah, the landing zone way higher than the Fed would like to see if that is the case. Both figures are unchanged from July's report. Now, look, another quick look at the treasuries and where they're currently trading as well. The 2-year trades, what's that, 368 at the moment. The 10-year, 3708. And I've got a chart I'm going to show you in a moment. And I've been banging on, and I make no apologies, trying to explain to you lot out there that it is not necessarily the change in interest rates at the federal funds rate level that moves the curve, that moves what you Americans are paying for your debt. And our team last night, overnight, put together a chart of one aspect, a very important aspect of consumer debt. And I want to show you this. And this is the 30-year fixed mortgage rate. Now, there's a lot to say on that chart as well, including the fact that you can see there it's at its lowest level in the last year plus at 6.25%. 6.25%, yeah? But look at the middle of that chart. That is 7.76%, and I can tell you that was hit, 7.79 if I want to be pedantic, and that was hit just over a year ago on the October the 26th, 2023. We have come off on that rate by roughly 1.5%, give or take the change as well, without one interest rate move. So this is what I've been trying to explain to viewers for ages. It isn't necessarily the 25 or 50 that you're all getting obsessed about. It's what's going on around that. It's what's going on for demand for credit, supply of treasuries as well. And goodness knows, I hope the ABC team who are doing this debate, and I hope someone talks about the economic plans of both Trump and Harris, because the supply of treasuries could be ratcheted up to a volume, 11, if we're not careful with a couple of these plans that we're seeing from both candidates as well. But the point remains the same as well, that the cost of money, the benchmark mortgage rate in the United States, has gone down dramatically since its highs of last year.
Yeah, indeed. I think the market's now looking at some of the discrepancies out there in these trades and credit markets in particular. DataTrek had a piece out yesterday saying, look, if you look at what the Treasury bond market is saying, it is effectively saying that the Federal Reserve is badly behind the curve when it comes to rate cuts. And they're pointing out the deviation that you're seeing between Treasury yields and where they're trading, the 3.65%, give or take a few moves intraday. That is a 1.68 percentage point difference with where future policy is according to the Fed funds rate. So there is a gap out there in the market in terms of positioning, and typically they say there is some catch up, but this can also be the precursor to recession based on that deviation. Typically you can also see a recession.
Come on. Do we really think that the curve has been a good metaphor for where the economy is going? The curve has been calling for a recession for most of the last year or so, and funnily enough, we haven't touched anywhere near it. I know things are getting worse now, but to say that the curve is anything other than a random generator of data, it hasn't been accurate. All that yield curve inversion stuff about a recession that's been going on for a long, long time, it's failed to be an indicator.
We have a ton of stimulus, though, being thrown at the system. So let's face it, I mean, is this time skewed by the amount of fiscal spending that has been happening? And that can make a difference. I think the point that I really want to make, which I'm not sure we have time for, but was around the labour market. And I think that's where you've seen dramatic changes, and that could be the precursor to some sort of downturn.
And have we seen dramatic changes in the labour market? We're still at 4.2% handle.
We have. So if you look at the numbers, we've had revisions lower from what we were 118,000, the new figure, down to 89,000 in July. So that's June, July. And the latest numbers are also 142, but with potential revisions.
Barely moved.
So if you look at the US labour force, which has grown by an average of 1% annually over the last 5 years, apparently the economy needs 132,000 jobs a month to keep on growing. So we're not at those numbers according to DataTrek in its latest research. So we're under that. So the labour market is shrinking for the last 3 months. Thank you for listening to Squawk Box Europe Express.
For more market moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.